Good morning and welcome to the SEASCAPE Energy Asia PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll. And I would now like to hand you over to Executive Chairman James Menzies. Good morning to you.
Thank you very much, and good morning, everyone. Welcome to SEASCAPE Energy Asia's interim results for the period ending 30th of June 2024. And it's our first results under our new banner, and since we have relaunched as SEASCAPE. You're going to hear this morning from myself, but mainly you're going to hear from Nick Ingrassia, who's here to my right, our CEO, and he's going to take you through most of this presentation. I will chip in when we talk about some of the assets under discussion here. But one thing I'll draw your attention to on this slide around presenters and the board is the people we have now at the top of this company. Having gone through this pivot, we have shrunk both in terms of the number of staff, the cost base, also the board size. Our previous company, Longboat, had a seven-man board. We're down to 4, which is myself, Nick. Graham Stewart is still with us on the board as a non-exec, and he was the chairman of Longboat. We brought in Geraldine Murphy to join the board, who's been a great addition, and really, really happy to have Geraldine with us. Known her a long time, and she's a very good hand. And Pierre Elias was working with me in Topaz, has come in to Seascape. He's not on the board, but he runs our Malaysian business and is really our figurehead out in Southeast Asia and leads the charge on a lot of the stuff we're doing, particularly around Malaysia. So I've introduced myself before on these calls, but as you may know, I was CEO of Salamander, where I was working with Nick in the latter part of that, the existence of that company, but have spent a long time out in Asia, helping build businesses, trading assets, buying assets, developing fields, drilling wells, you name it. And I'm a geologist by background. I'll now hand over to Nick to introduce himself and take you through most of this presentation.
Thank you, James. Good morning, everyone. Welcome to our interim results. First one, I guess, in my role as CEO, and sort of the first one, as James said, under our new banner of SEASCAPE Energy. Quick sort of background on me. I have sort of a long history in and around the oil and gas space, both kind of as an advisor early on in my career doing banking, but then mainly as a corporate development person, working at businesses such as Valiant, Barrow, Longboat, and indeed Salamander, where I worked closely with James towards the end of that journey. Very excited about the opportunity set ahead of us. And I think probably where we'll start is just by doing a sort of a quick recap on what's gone on during the first half of the year, which has been extremely busy for us. As we really sort of tried to reposition the business to focus on this enormous opportunity set that we see out in Southeast Asia. So, I think it really breaks down into 3 elements, which is first we have, the strategic pivot has now been completed. As James mentioned, we've got changes to the executive team and the board. The business itself is very nimble and really shrunken down to a very small board and also a kind of core team. We have completed the sale of our Norwegian entity to our partners, JAPEX. That was done in absolute record time, and we were very pleased with the overall outcome there, which has then really allowed us to kind of rebrand and refocus the business on Asia with our cornerstone asset on 2A. And I think that's really where the sort of rebuilding the portfolio comes in. So we have 2A held, and we'll come on to that, I think, in a little while. James can take you through that. But we have a farm out underway on that. It's a world-class asset, incredibly exciting, very large exploration, and it's really sort of ticking all the boxes for people. But we're also trying to build that portfolio and really trying to put some underlying value firm value underneath the share price. And so we've got the imminent award of a new PSC in Sarawak, containing multiple gas fields in it. We will talk a little bit more about that to the extent that we can, but we will be getting more, we're getting very close to the signing of that, and hopefully we'll be able to discuss it in a lot more detail very soon. And of course, we're pursuing other opportunities across Southeast Asia, both from a sort of production perspective, development, exploration, the whole kind of gambit. And we're very actively working on opportunities. I guess the last leg, something again to just sort of drive home, is that we've had sort of significant cost cut, really trying to right size the business, especially during the second quarter. We've reduced the G&A by around 40%. Unfortunately, the full effects won't be seen until 2025, but we really have a good handle on costs, and we're trying to really reduce down our running costs, which has now given us sufficient capital through the end of Q1 25. And obviously, in the meantime, we've got lots of things going on, especially with the farm out, looking to bring capital into the business. Just a quick touch on the financial summary. I really won't spend too long on this. We see these as what I call a transitional set of accounts. Due to the Norwegian joint venture being sold, it makes for a relatively messy set of accounts, unfortunately. We have a tiny little bit of income, which is really our recharge services from our Norwegian joint venture from PLC, which is bringing in a little bit of revenue, effectively defraying costs. Our admin expenses were up slightly. That was largely due to a write-off of some costs with a new venture, which unfortunately failed to transact earlier on in the year. And then we had the write-offs related to the Norwegian joint venture. Cash at the period end was £1.3 million, but there was also effectively a payable of £1.9 million related to the joint venture asset, which we received post-period end, giving us a touch over £3 million in cash, really sort of after the end of the period. And this is what we're using to fund the business going forward. So what does that business look like? Today, we have our Block 2A, which is, as you can see there, in the sort of deep water Sarawak out in eastern Malaysia. And then we have a PSC as well that we are awaiting award, which is more in the shallow water, containing multiple gas fields. These are all discovered resources, which will lead to a very quick, low-cost development, which we're very excited about. For us, the way we see SEASCAPE is as one of the sort of very few listed small cap E&P businesses that are focused on Southeast Asia. We pride ourselves on being, very technically driven. We're well positioned through a long-standing network in the region through Pierre and James and myself, having worked in Southeast Asia for a while. And now having been there for several years, our name is very firmly on the map, and we've developed some and rekindled some very good relationships. There's a backdrop there of this positive Asian macro growth story, really as host governments try and encourage investment into the hydrocarbon, well, actually into the energy sector in general. I think they're a big beneficiary of a declining investment climate here in Northwest Europe. Against this backdrop, we see enormous amount of opportunities, host governments welcoming us in, trying to get us involved, pushing things forward as quickly as possible, and a very limited peer set for us, and sort of the things that we are looking for and chasing out there. And it's very exciting and lots to kind of get out there in the near term. I will hand over back to James to sort of go through the assets a little bit, but I think really we've got the kernel of a really good portfolio, and this is really the start. So I think that's the sort of context to see what we're doing in. So maybe back over to you, James, to go through 2A and our new PSCs.
Very good, excellent. Well, thank you, Nick. One of the things I'm quite pleased about is, although we haven't got a lot of assets to talk about as yet, but what we have got is a really strong competitive edge. When Nick mentioned we're one of very few peers, one of the reasons for that in Malaysia is that the barriers to entry are very high, and I think I've mentioned this before, but but they just don't let many people in to the opportunity set that's in front of us here in Malaysia. And so, there is a real dearth of small, credible, technically literate, independent E&Ps playing out here. And this is one of the reasons why we're able to position SEASCAPE to capture these kind of deals. So we're going to talk about 2A, which is our big sex and violence opportunity. It's lots of blue sky. It's a giant prospect. It's exciting. It gets the blood going. But actually, what's also important when you have quite a fit portfolio is you have something underneath that is a more hard asset that can support that kind of activity. And this is why we like this new PSC award. And believe you me, we would love to be in a position to sit here today and tell you all about it. It has taken longer to get this over the line than we believed. And partly that's driven by the fact that we've got to deal with not only our own board, that's an easy one, but also we have an operating partner. We also have the federal state of Sarawak involved in this license, and we also have the state company of Malaysia. And prepare to be shocked, but our timelines are not their timelines. They're not bothered when our results come out. It'll have to be done, when they're in their own sweet time, when they're ready, and that's fine. That's how it is in Asia. But we're confident it's happening. As Nick said, it's shallow water. What's great about it is it's a portfolio of gas fields. So one license, but we get multiple assets. It comes at zero cost. This is being awarded to us as part of a bid round. And another reason why I think this might be taking longer than perhaps we would have expected is there's a new set of terms, these small field asset fiscal terms, which are much sweeter than we're used to seeing out here in Malaysia. And so, the contractors, i.e. us, get a bigger share of the profits. And that's because they want to stimulate activity out here to get these smaller fields exploited. That's the objective of the Malaysian state. And as I mentioned earlier, there's just a very, very, very few people who are in a position to do that, for whom this is something that's material, but at the same time, can actually do the work. So we're one of very few, and this isn't the only one, by the way. I mean, there are more of these that we can capture. So when we come to sit here before you next time and talking through this asset in detail, remember that this is one step of many that we want to be taking, and we have a march on competition. We know that other independent E&P companies are looking at this as well. Particularly in light of what's going on in the North Sea, in the UK, for example. There's a great example of activity or a sort of province that's highlighting the attractions of Asia, because you just can't do this sort of thing over here in the UK. Anyway, we've got a big opportunity set, gas fields, and data. That's the other great thing that isn't to be underestimated, is how much data you collect as part of this. Free of charge. So a wealth of well data, test data, seismic data, you name it. It comes with almost a deluge of information that you've got to work through. But economics look great. It suits us perfectly. So we're very, very, very excited about it. And we really want to sit here and tell you more. But suffice to say, I think this is a great solid asset to have under you, and is going to lead to cash flow, production growth, and further growth elsewhere in the region for us. Okay, above and beyond that, we have 2A. Again, I know I've talked to you about this. Really, our activity here has been on two things. First of all, where do we drill this prospect? And I think last time we did one of these, we were working that out. We have a proposal. But what we've really been working on is bringing in an operating partner to come and drill this well. This well is going to be in 1,000 meters of water. It's a big, big well. We don't pretend we're in a position to drill it ourselves. We would like to have an operating partner, which basically means bringing in a bigger player. And as you can see on this map, everyone else in this basin is full of big players. In fact, there aren't any small players apart from us. We're the only ones sitting out here. It's dominated by Shell, Petronas, obviously, Conoco in there. The other new player is Total, who have come in on the big acquisition in the region in this basin. And PTT have been very successful here. We also see the Japanese, obviously, driven by interest in the Bintulu LNG plant, which is, a supplier of LNG to East Asia, Korean buyers, Japanese buyers. So that's the sort of player who, is chasing upstream opportunities out here. We have 52.5% of this block and operatorship. So we have a chunk of equity. We're very happy to trade, and operatorship, we're happy to trade. What we want to do is give our investors a free ride on drilling of a well on the Kertang giant prospect. And, it's an exciting prospect in a province which has seen excellent strike rate. And, we make note there that 25 wells, 83% success rate for Petronas, discovered more than 1 billion barrels of oil equivalent. More than half of those were made in Sarawak, in this basin that you're looking at on this map. And that's why we're seeing a lot of industry interest in that, and we want to make sure we crack the right deal. So that's taken up most of our time pretty much on 2A. Short reminder of what it is. Here's a line across Kertang, 1.7 billion barrels of oil equivalent. That's around 9 TCF. And that's ERCE, the independent auditor's view of the resources in that structure. And in multiple different levels, different cycles, as we call them, stratigraphically, across that structure, ranging from very shallow cycle 5, 7, up high, where we see the amplitude brightening above the structure. We can see a gas chimney underneath that, feeding it from this structure itself. And then we can see the reservoirs and the source rocks actually sitting around the structure itself on that seismic line that we show. Also like the fact that it looks like these other giant discoveries in the basin. So these ones, Kasawari, Langlaba, and Marjoram, are well-known big multi-TCF discoveries made by various operators. Of these, Shell operate the Marjoram field, PTT have had success with Langlaba, and Petronas have now got Kasawari on stream. So yeah, this is very much a lookalike. It's the same play, it's the same idea. It's a comparable, if not bigger size. And so, it's not the only giant out here, but we think at the moment this is probably the biggest undrilled prospect, possibly in Malaysia, certainly that we've seen out here in the Luconia in Sarawak. Okay. Let me hand back to Nick to talk a little bit about what's been going on around the region.
Thank you, James. So I think one of the things we wanted to use this presentation to do is just sort of talk a little bit about how excited we are about the region and why we are so excited. As we mentioned, what we're seeing here in Northwest Europe, I think just in general, is a real challenging investment environment. Where host governments here are really discouraging investment into hydrocarbons. And I think one of the main beneficiaries of that sort of downturn here is you're seeing an upturn out in Southeast Asia, where you still see a huge amount of the primary energy consumption being fired by coal. And I think in terms of trying to reduce down overall emissions, if we're thinking on a sort of a global scale, increasing gas-fired power generation, especially out in Southeast Asia, there's a huge opportunity there, which would be a huge net gain. And I think the host governments have really realized this. And what they're trying to do is encourage that investment. And they're doing it in sort of multiple ways. We're seeing, as James was saying, changes to some of the PSC terms, which are really advantageous for the likes of us, trying to get more investment into smaller discoveries and get them on stream quite quickly. Licensing rounds are becoming more regular, and sort of a number of countries who haven't had licensing rounds in a while have been in running them. The Philippines, we saw running their first licensing round in almost 10 years. Upcoming licensing rounds we're anticipating in places like Thailand and Vietnam in the near term. And what this is doing is allowing some major play opening discoveries that we're seeing. We've seen some of the largest discoveries globally made recently in the past couple of years. E&I made a giant discovery in Indonesia in the Kutai. 6 TCF. We see the Andaman Sea over there in the west by Harbor and BP and others who've really been chasing a really interesting gas play there. We've been seeing some of these big gas fields moving both into production. We've seen Jerun recently start producing in Malaysia. We've seen approvals for giant projects from E&I and things moving forward like Abadi LNG, which has been in stasis for a long time, but now finally being unlocked because of this demand. What that's doing is it's drawing more majors back into the region, people making acquisitions and looking for opportunities. And I think we really have an early mover advantage before this next pulse of investment comes in. And so what we're really trying to do is position ourselves ahead of the curve now, trying to get a hold and build these resources and look to build a full cycle business that is going to be eventually attractive to someone as an acquisition target. I make no bones about the fact I've been involved personally in 3 E&P businesses that have been built up and sold. I think E&P businesses have a life cycle. We're still at, I guess, we've reset and hit that reset button. We're still at the start of ours. But we're looking to build and monetize a business, and we have a history of doing that, and that's really the sort of plan here. And so, we're in the right place, it's the right time, and we've got the right team that is chasing that. So just to, I guess, summarize, we've got multiple near-term catalysts ahead. We really are this rare commodity. There are not very many peers out there chasing the sort of stuff we are. The things we've got a hold of are really exciting. The pending PSC award and shallow water Sarawak gives us some firm value, which underpins the blue sky upside we see in 2A with the farm out, well underway, and a lot of interest in that. We've got a significant opportunity set coming up, and we're chasing that. We're very focused on chasing those opportunities to make sure that we are taking full advantage of being, kind of a first mover and using that uniqueness we've got. And we've got a fantastic team that is super focused on making this all happen. So I think that sort of ends the first bit of the presentation. I think we were going to then move to doing a little bit of Q&A.
That's great. Perfect, Nick. James, thank you very much indeed for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right corner of your screen. While the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Nick, James, as you can see, we have received a number of questions throughout today's presentation. And if I may now hand back to you and kindly ask you to read out the questions, give responses where appropriate to do so, and I'll pick up from you both at the end.
Great. Thank you very much. So thank you all for your questions. We'll kind of go through, I'll try and summarize a little bit and maybe I'll sort of try and ask some of the questions that James will do as a sort of a Q&A style. So I think that there's a question here around just the overall strategic shift to Southeast Asia, and what are we seeing that makes it more attractive than Norway for a smaller business, and whether or not we're going to expand beyond Malaysia.
Well, I think, Nick, you're very well positioned to talk about the differences between Southeast Asia and Norway, as Nick was intimately involved with both. But I can certainly talk about the expansion beyond Malaysia. But
yeah, okay. So I mean, if we're being entirely honest, we spent a long time and many hours chasing many transactions in Norway. And I think what we ultimately found was that small businesses were really struggling to make value accretive acquisitions due to the fact that there were, firstly, there weren't very many assets on the market trading hands. The ones that were ultra mature, which in and of themselves bring some problems. When assets get very much to the end of their lives, you start having sort of failure risks regards to the infrastructure, which is something we don't really want to expose ourselves to. And you know, the cost of capital, I guess the prices being paid for assets just didn't reflect the cost of capital that a small E&P business had. Even when we had our joint venture with JAPEX, we were just struggling. And you know, I think James probably put it best one time when we were talking about the strategy, which was that, you know, it's very hard for you know, a new small business in Norway to chase things, and you probably wouldn't start up a new small E&P there to go and chase anything, just because the opportunity set that used to be around when Faroe was around, and indeed what we saw at the beginning of the Longboat, was much different than what we saw at the end. And if you contrast that with Southeast Asia, where you're welcoming small businesses in, the assets are in shallower water with shorter lead times, and this kind of open and welcoming attitude towards smaller businesses, and we believe the returns are more aligned with the sort of cost of capital that we have. It's really, I think, what drove that strategic pivot. I guess in terms of whether or not we're going to expand past Malaysia.
Yeah, I mean, I think Malaysia comes across as the #1 destination for us for a variety of very good reasons. But outside of that, I've always quite liked Thailand. I quite like Vietnam. Indonesia has had some improvements recently. I used to be a little bit cold on it, but it looks like they've recognized some of the challenges and are doing something about it. The opportunity set isn't so great in Vietnam and Thailand. It's a much more limited, you know, in terms of the running room for someone even of our size, to be honest with you. Indonesia's always got lots of opportunity, but it's just somewhere you have to be very careful of the steps you take, and is easy to make a mistake in Indonesia. And having lived and worked there for many years, I'm painfully aware of it. But sometimes, you know, the rocks are good. It's some of these basins are great places to go. You have to be careful with your partners. But so I think as long as you're alert and you know what you're doing, there's definitely opportunities beyond Malaysia for us. Farm out, people are asking. I think we probably have to stay stum on that for the moment.
Look, we've said all along we're working very hard on it. It has an enormous amount of focus for us. It's a huge value driver for the business. We've said previously there's been intense industry interest. The way I like to describe 2A is that it's the right block in the right place at the right time. You know, this is a really, truly spectacular block with a huge prospect on it that we were able to get hold of largely because of, you know, a lack of investment in a sort of post-COVID environment, and before Southeast Asia started, you know, heating up. And that is sort of, therein lies the sort of the right time, which is that, you know, the appetite for exploration globally has increased enormously. We've seen a lot of that in Namibia. We've got sort of London-listed peers who are active in South America that have been sort of benefiting from that. And so actually exploration has really come back to the fore. And Sarawak, we think, is the right place. Again, we've seen a lot of acquisitions. We've seen a lot of development and just a lot of excitement with people coming back in. So the plan has always been to try and execute a transaction during the second half of this year, and so we're very, very focused on making that happen.
Okay. I noticed some questions about DRO signing and slippage and timetable, which I think, you know, is a fair question. You know, we were expecting it, and I think the other DROs were announced sort of mid-summerish or late summerish. So why haven't we signed yet? You know, we're as frustrated as the next guy, I can tell you. But I think the reason is actually, really the big reason is that we're dealing with an additional state, if you like, within our group. So normally when we negotiate an EPSC in Malaysia, we would be dealing with Petronas, the regulator. And your own partnership group are normally quite reasonable. You know, within the industry, we know how this works, and we all get on fine with it. But here we have not only the state company, but also the federal state of Sarawak, who is having a direct interest or an interest within the project itself, and how that interest is held and materializes is something which is relatively new. And so we not only have the interaction between ourselves and those two bodies, but also between the two state bodies themselves. And sometimes we're the go-between, sometimes, we step aside and let them carry on. And it's just an additional complication which has taken longer. And I think we also have to recognize we've got the working group, which is, us and our partners. There are executive committees of both of these state entities, and then you have boards. And everything has to go up and down for approval at every step. And so it has, been a bit difficult. But I think when you layer on that these new terms, where understandably, I think they feel they're giving the contractor, i.e. the investing companies like ourselves, sweeter deal. These guys are getting a sweet deal in their mind. So, that everything's getting scrutinized probably harder than it would have done historically. But I think in Asia, you've got to go with it. I think if we get the feeling it's not happening, believe you me, we wouldn't be sitting, we'd be having a very different conversation. It's happening. It's just with Asia, you've got to go with it. And so, when people ask, well, when, and, timetables, and is it going to be tomorrow? Is it going to be next week? Is it next month? In Asia, it's hard. It's a hard one to answer. Malaysia is one of the better countries in terms of following a timetable and a schedule. But I think we're in slightly uncharted territory. But anyway, please bear with. It's happening, and we're confident we're going to deliver it.
Yeah, there's a huge desire by all the parties to get it over the line. So there's not one party that's dragging their feet or not. It's just a time issue. So, patience is key. We understand that, having been active there for many years. And so, there's no concern. There's nothing untoward going on. It's just taking a little bit of time. So I think that's probably the answer there. I think there's been some questions about how we're going to fund this. I think, that's, once we get this awarded, that's going to be the next area of focus for us, not only sort of putting together, or the operator putting together the development plan, but then looking into how we fund this. I would say, I think there's a lot of funding options at the moment. And what we're seeing, especially in Southeast Asia, is, again, this desire to get molecules and barrels onto the market. It gives us lots of options, both on sort of a banking perspective. Traders are very, very active with regards to trying to finance things. And with the data set that we have here, we think that is eminently doable, especially around the liquids. And we'll have a decent equity stake in this new pending PSC. And so we also retain an option to farm down if we sort of thought that would be a better way of trying to sort of do some financing there. So we'll have, everything will be open to us, but we're very confident, given the high quality there, that a financing solution should be relatively straightforward to find.
Comment on costs for the PSC negotiations and farm out. We've largely kept this in-house, so we're not ones to go out hiring expensive advisors, particularly having gone through the pain of cost reductions ourselves and during the pivot. But Nick, you want to?
Yeah, no, look, I'm a big believer of taking as many things in-house as possible, to the extent that we can handle and manage those. It really is a cost thing, but it's also partially the fact that we have a lot of the expertise in-house. I once upon a time, spent time as a banker. Geraldine, who we've welcomed onto the board recently, is a long-term banker and great at helping us navigate some of this stuff. So it's really been around, trying to own the whole process, keep it internal, and manage our costs as well as possible.
Majors are someone's asking about majors being in the area in terms of the farm down. Should we assume? Yeah, we're really, we need a big partner. We need a big operating partner. And as I showed and talked about, I think most of the players, in fact, pretty much all the players out there are big operators. So that should be your assumption. It wouldn't serve us to farm out to another small company. That wouldn't work. We need a carry. We need an operator, and they're the guys. And yeah, it is competitive. So I think other questions are being asked around, if you're going to run out of money, is it back against the wall, blah, blah, blah. Actually, this is an intensely competitive process. So that's great. Very pleased about that.
Yeah, no, absolutely. I don't think we'll answer any more questions. I see a lot of stuff around the DROs, and trust me, we are going to, as soon as we can, upon award, we will go into a lot more detail. We'll have another one of these sessions. I think they're hopefully very useful. Hopefully you find them very useful for staying in contact with us as the executive team, and sort of bring you along with the whole journey. So I won't answer any more questions about the timelines and what have you, because I would prefer to do that with all the detail in front of us. But suffice to say, these are kind of near-term developments, and you're very incentivized under the SFA PLC terms to really get after it very quickly. And one thing I can tell you is that the partnership that we put together is very aligned on that. I think there's sort of a few questions around acquisitions and looking at production assets and what have you. We are continuing to look at opportunities across the spectrum, across the life cycle, perhaps I should say. The funding of those will really be the key. There is financing out there. There's financing that is available for these assets, but it's about finding the right one at the right place, right time. And so it's about trying to sort of dovetail all of those things together. So very hard to comment on how we would finance a production acquisition. But one thing I can say is that we're only going to undertake an acquisition of any description if we see it as being value accretive. We're very focused on creating value for all of our shareholders. So we will not be doing anything that we don't see as being, very value accretive to the business. The recent, I can't comment on sort of the failed venture. Apologies on that. Suffice to say, it was a major disappointment all around. But again, this is one of these things where it keeps us very focused on minimizing our costs until we feel that something is very, very likely to happen. And just in general, trying to keep as much stuff in-house as possible, retain ownership over it, which I think is very, very crucial. Who are the largest shareholders today? I would recommend, sorry, I'm probably mumbling a little bit. We have a question here, which is, who are the largest shareholders today? I advise you to go to our website. We have, as an AIM-listed company, we are obliged to keep our shareholders up to date on the website in our sort of major shareholders section.
Just last one. Someone's asking if we would have aspirations to be an operator. I think it's a good question. I believe actually it probably would be good for us to do that. And given the scarcity of smaller and mid-cap operators in Asia, I think there is a huge opportunity set for somebody who can bite this off themselves and carry out these operations. So the answer to that is yes. I think we just have to be, and I think we can do it faster than 5 years, by the way. But you have to kick off on the right project. You want one. You really want a project that is very doable, and one that isn't, doesn't have the challenges, is reasonably straightforward. And the beauty of that is most of these Southeast Asian small field discoveries are quite straightforward. You're not breaking new ground. You're not reliant on new technology. There's tried and trusted ways of doing this that have been done over and over again. So yeah, absolutely. I think we should be an operator, and I would fully expect to see us do that sooner rather than later, actually.
Perfect. That's great, Nick, James. Thank you for addressing those questions from investors today. And of course, the company can review all questions submitted today, and we will publish those responses on the Investor Meet Company platform. But before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Nick, could I please ask you for a few closing comments?
Great, thank you very much. Well, thank you all for joining today. We really do appreciate it. We strive to sort of have best-in-class investor relations. This is one of the key platforms that we will be doing it on. We've also updated our X account and our LinkedIn. Our website hopefully has a bunch of information on it. This is the start or the restart of a really exciting journey. We're all very excited about it. We've got a nascent but growing portfolio. We've got a lot of things that are going to be going on. And we look forward to creating a lot of shareholder value in the months and years to come. So thank you very much, and we look forward to keeping you updated with all the exciting things to come.
Fantastic, Nick. James, thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of SEASCAPE Energy Asia PLC, we would like to thank you for attending today's presentation, and good morning to you all.